Tom, you've got a survey out. What did it show?
It showed that companies are still hiring. Employees want to join a company. Compensation has surpassed culture as the preeminent thing, and that's a big change since coming out of the recession in 2010, 2011, 2012. And the statistic you showed of 7 million open jobs is exactly true. We may have only added 155,000 jobs in November, but what it shows is that the jobs are out there, companies are hiring, and they're still making money no matter what the volatility of the stock market is.
And why are 7 million jobs open and going unfilled? Is it because there's a skills gap and that we don't have the right workers for those jobs?
You hit the nail on the head. You know, in the STEM side of it, and what companies are hiring in technology and science, technology, engineering, and math, there's still that skills gap. On the hourly worker, we still have a lot of jobs that people who are the long-term unemployed don't want to get in and do, the entry level or the blue-collar jobs. And so you have this intermediate period where we're just not matching it up correctly. And then following up is that those jobs are going to go overseas, and they just are. The white-collar jobs now, Tyler, go overseas, whether it's accounting or legal. That stuff can be done. We're not competing against our neighbors in the cul-de-sac or the apartment building. We're competing against people in other countries.
You mentioned this interim period where the skills don't match up with the workers. What gets us through that interim period, Tom? I mean, what can we do to accelerate that?
You know, that is, 7 million is the number, right? That's the $7 million question. What companies are starting to do, and we're seeing a lot of this with our clients, is they're investing a lot more in training and development. So especially this problem coincides with the baby boomers coming out of the workforce. So you have more investment in training and development, then you have more kids coming out of college, and that's what's going to happen to get us over this hump. And, you know, what we'll see is eventually there will be a decline in the economy, but it's kind of becoming this self-fulfilling prophecy. It's all we're talking about. Sometimes you have to sit back and say, this is a long tenure of recovery. That's an okay thing. The Fed is doing their thing, raising interest rates. We've never been in a technology-driven economy in a global world the way it is now. So it's going to be a longer recovery. This is a good thing. Let's not look for the end of the world.
What percentage of companies plan to add to headcount next year, and how does that compare with a survey you might have done a year ago? And how many plan to raise wages?
Well over 50% both are going to raise wages and are going to hire more this year than last year. However, what we see differently, Tyler, is that they don't hire in mass as much. And I think what we saw in the mid-2000s, and especially during the dot-com, is that companies were hiring in surplus. They were hiring way more people than they needed to be prepared for the growth. What we have now is companies have learned their lesson from the Great Recession and the dot-com bubble bursting in 01, 02, 03, is that they've realized they need to just hire when they need it. And we're seeing that with gig workers, we're seeing it with temporary staffing, we're seeing it with independent contractors, that companies are just more intelligent about the types of the ways they hire and the different types of people they hire.